We can now speak to Economist and CEO of Meyer Resources, Cornelia Meyer. As always, Cornelia, great to have you on the show with me today. So, Iran has declared the Strait of Hormuz is closed and is threatening to attack any vessel trying to pass through it. We all know this is a key global oil route. What impact is this having on oil markets as the conflict now enters its fourth day?
Thank you so much for having me, Leigh-Ann. It has a great impact. And even, if the Straits is not formally closed, no insurance company will take the risk of insuring the cargo of an LNG or an oil tanker. So de facto, the Straits have been closed since about Monday. It has a big impact. I look at oil. Oil prices are up about 17% since last week, this time last week and now, and they're up about 37% from the January 1 this year and now. So this is big. LNG is very, very important indeed. 20% of LNG exports, LNG production flows through the Straits of Hormuz. And if you look at it, it certainly affects Asia, where most of it goes, but it also affects Europe. Let us not forget, Europe wants to wean itself off Russian gas, pipeline and LNG. So it has Norwegian gas, it has US gas, US LNG, but it definitely also needs the Qatari LNG.
And you've just touched on that for me right now, Cornelia, where you touched on LNG. And I want to talk a little bit more to you about that, because Iran's widening attacks have struck those critical gas facilities in the Gulf, with Qatar Energy halting LNG production after Iranian strikes. How do you assess it? Apologies, we just had a blast straight above us here in the studio. I do apologise. I just had a little bit of a moment. We are okay in the studio. Sorry, we just had a blast above the studio right here in Dubai. But Cornelia, I just want to get back onto how you assess the impact on global LNG prices and what wider impact that could have.
Absolutely, and please be safe, Leigh-Ann, and please be safe, everybody in the studio, everybody in the UAE and the wider GCC region. Yes, it does. I mean, as I said, gas prices are up about 20%. So, we're not in the dead of winter. This would really be bad if we were in the dead of winter in the Northern Hemisphere, but we're not in the dead of winter. But for countries such as India, and especially Bangladesh, Pakistan, if LNG prices go up, that's really, really bad news. It's also bad news for countries like Egypt, who need LNG from the Gulf, and who also depend on this energy network. So this is really, really difficult for everybody concerned.
And what steps should the US and its allies take to stabilize energy markets right now, if anything, Cornelia?
I don't see what steps can be taken. I mean, obviously one can go into the strategic reserves, but I mean, other than that, I don't see what steps can be taken. The only step that can be taken is to stop hostilities and stop what's going on. But as so often with these wars, you start something and then they take up a life of their own. And if I might just add one thing, Qatar is also important as a fertilizer producer, because gas becomes fertilizer, right? Becomes ammonia, becomes fertilizer. And that is very important too, especially as a lot of the Russian fertilizer, Ukrainian fertilizer, is now not going out. Qatar has become increasingly more important. Then that goes not just to energy, that goes to food prices then. So this whole thing has a huge inflationary pressures.
And Cornelia, China, we can't forget them out of all of this, because it's the largest buyer of Iranian crude oil as the conflict continues. How could this impact China's energy supply, import costs and broader economic stability? Because I think this is a concern right now across many regions around the world.
Absolutely. And China, if you look at China's imports, it got about 10 to 13%, depending on the months, depending on the way you calculate it, of its imports in crude oil from Iran. So, you can work around that. The other ones, they get a lot of Russian crude, which is also impeded by the Western sanctions. Now, one thing we have to say about China, for about a year, they have been beefing up their internal, especially underground storage of oil. So when oil markets were very weak, the one thing that kept them up was Chinese buying in order to put it into storage. So in the immediate future, they will be fine. But, at some stage, the immediate future is over.
And spot gold, this is something that has surprised me, Cornelia. I want you to talk to me about it. It's fallen, trading 5% lower. Why are people moving away from this traditional safe haven of gold and they're moving to the US dollar, it appears?
There is the old saying of traders, buy on the rumor, sell on the fact. And that's what's going on here. People were a bit worried on the geopolitical situation, so what they did is buying gold. And then as the conflict started, what you saw is the US dollar went up. So when the US dollar goes up, and when you see that probably the US Fed will not go down with interest rates, lower interest rates are better for gold because gold is not a revenue yielding commodity. It's a store of value. So the lower interest rates, better for gold. So the interest rates will probably not come down further. So that works against it. And also, once a crisis strikes, people who've bought it for the time of crisis will start to sell. So it's nothing unusual that the time a crisis strikes, oil prices go down. But 5%, they've been up, I don't know how many percent over the last 12 months. So I wouldn't be too fussed about that just of yet.
Yes, indeed. The gold has definitely been soaring, hasn't it? I like that. Buy the rumour, sell the news. Cornelia, Meyer, as always, great to have you on the show. Apologies for the interruption when we heard that blast.
Thank you so much, and please be safe.
Thank you.